Gear up for a thrilling Thursday edition of the Tech Stocks Daily Podcast. Today we're dissecting Microsoft's blockbuster earnings, outperforming analysts' wildest dreams with breathtaking revenue growth and an ambitious dive into AI technology. Not to be outshone, Meta's pivot towards AI-driven content is shaking up the social media landscape, setting new benchmarks in personalized digital advertising. Together, these giants are not just surpassing quarterly expectations, they're reshaping the future of tech. Stay tuned as we unravel how Microsoft's revenue surge and Meta's AI revolution are igniting optimism in the NASDAQ and what it means for your tech portfolio. It's a dynamic day in tech, and we've got all the insights you need. In the spotlight of today's tech news, Microsoft Corporation, the tech behemoth traded on NASDAQ under the symbol MSFT, has once again demonstrated why it remains an indomitable force in the technology sector. The Redmond-based software giant delivered a striking performance in its fiscal third quarter earnings, surpassing analyst expectations on both revenue and earnings per share. Let's dive a bit deeper. Microsoft reported a formidable $61.9 billion in revenue, showcasing a robust 17% year-over-year growth. This figure not only exceeded the anticipated $60.9 billion, but also underscored the company's thriving cloud computing business segment. In terms of profitability, Microsoft reported an EPS of $2.94, edging past the FactSet consensus estimate of $2.82. This performance is up from last year's earnings of $2.45 a share on sales of $52.9 billion, illustrating a sustained trajectory of growth for the company. A critical growth driver for Microsoft in this quarter has been its intelligent cloud segment, which reported a staggering $26.7 billion in revenue, marking a 21% increase year over year. This is particularly noteworthy against the backdrop of Microsoft's aggressive push into artificial intelligence, evident in its launch of new AI services and solutions such as Microsoft Copilot and Copilot Stack. These innovations, according to Microsoft CEO Satya Nadella, are ushering in a new era of AI transformation, driving enhanced business outcomes across various roles and industries. Moreover, the success story extends to Microsoft's productivity and business processes segment, which rose 12% to $19.6 billion, and its more personal computing segment, which increased 17% to $15.6 billion. The growth in the latter was significantly bolstered by a staggering 62% uptick in Xbox content and services revenue. It's important to mention, however, that it's not all sunshine for Microsoft, despite the rosy earnings picture. The company has been facing an uphill battle in terms of cybersecurity, with a series of high-profile breaches raising concerns about security culture and practices within. Exposure to attacks from state-sponsored groups like Nobelium has thrust the company into the spotlight, challenging it to bolster defenses and rebuild trust. Yet, despite these challenges, Microsoft's stock has reflected investor enthusiasm, with shares experiencing a lift in after-hours trading. This reaction from the market is a testament to the underlying confidence in Microsoft's resilience, its strategic direction towards incorporating AI into its suite of products and services, and its potential for continued financial growth. Tying it all together, Microsoft's latest earnings report paints a picture of a company that not only beats expectations, but does so while navigating the complexities of rapid technological advancement and heightened cybersecurity risks. As a titan in the tech industry, Microsoft's ongoing innovations and financial health remain a critical barometer for the sector at large, especially as the company propels itself further into the AI era. All right, tech aficionados, let's dive into why Meta has been buzzing in the tech world today. Meta Platforms, the powerhouse behind Facebook and Instagram, has been making headlines for a couple of standout reasons that have caught everyone's attention. First off, the spotlight shines on the company's recent earnings report. Meta Platforms reported an impressive first quarter revenue of $36.45 billion, which not only represents a 27% year-over-year increase, but also comfortably beats the Street consensus estimate of $36.6 billion. This financial milestone is a clear indicator of Meta's robust performance and growing influence in the digital advertising space, despite facing stiff competition. But the financials only tell part of the story. The real buzz surrounds Meta CEO Mark Zuckerberg's reveal about the company's deep dive into artificial intelligence. According to Zuckerberg, more than 50% of the content now seen on Instagram and 30% on Facebook is recommended by AI. This significant shift towards AI-driven content curation marks a pivotal moment for the platform, emphasizing the company's commitment to leveraging cutting-edge technology to enhance user experience. This move towards AI isn't just about improving how users interact with content, it's also about revolutionizing the advertising experience. Meta's AI-powered tools, such as Advantage Plus Shopping and Advantage Plus App campaigns, have more than doubled in revenue generation since last year, showcasing the potential of AI to transform how businesses connect with their audiences on social platforms. These developments come at a time when Meta is pushing for more transparency and user control over AI recommendations. Last year, the company introduced new controls allowing users to manage what they see on both Facebook and Instagram, aligning with its broader initiative to empower users and increase transparency around AI recommendations. Furthermore, Meta's recent expansion of its policy on AI-generated content, including introducing labels for such content across its platforms, underscores its commitment to providing context and clarity about the AI-generated content users encounter. Now, here's where you come in, dear viewers. What are your thoughts on Meta's push towards AI-driven content curation and advertising? Are you excited about the possibilities these AI advancements hold for enhancing your social media experience? Or do you have concerns about privacy and the transparency of AI recommendations? How do you feel about more than half of your Instagram feed being tailored by AI? Drop your thoughts, opinions, and experiences in the comments below. This conversation about AI's role in our social media ecosystems is multifaceted and ever-evolving, and your insights are invaluable as we navigate this digital landscape together. Today's market sentiment is decidedly optimistic, buoyed by significant developments from leading NASDAQ-traded tech giants, Microsoft and Meta platforms. Both companies have not only exceeded financial expectations, but have also showcased a determined push into artificial intelligence, heralding what many see as a transformative phase in the tech industry. Microsoft's fiscal third-quarter earnings are a clear bullish signal to investors, with the company posting a staggering $61.9 billion in revenue and an earnings per share of $2.94, comfortably surpassing analyst predictions. This performance underscores Microsoft's dominant position, particularly in cloud computing and AI, with its intelligent cloud segment achieving 21% year-over-year growth. The launch of Microsoft Copilot and Copilot Stack amplifies this further, with CEO Satya Nadella emphasizing AI's transformative potential across industries. Despite facing cybersecurity challenges, the market's positive reaction in after-hours trading to Microsoft's earnings report reflects confidence in the company's strategic direction and its resilience amidst security concerns. Meanwhile, Meta Platforms has made waves not just with its strong first-quarter revenue of $36.45 billion, but also through its deepening commitment to leveraging AI to revolutionize user experience and advertising on its platforms. Mark Zuckerberg's announcement that AI now recommends more than 50% of the content on Instagram and 30% on Facebook has sparked conversations about the future of social interactions and digital advertising. Additionally, the implementation of new controls for managing AI recommendations and the labeling of AI-generated content underscore Meta's focus on transparency and user empowerment. This strategic emphasis on AI and its implications for personalization and engagement in digital spaces further bolsters positive market sentiment towards Meta. Collectively, the financial achievements and strategic maneuvers of Microsoft and Meta reflect a broader industry trend of tech leaders doubling down on AI innovation. This not only points to the sector's resilience in the face of economic uncertainties and security challenges, but also to its readiness to usher in a new era of technological advancement. The market's optimism today is thus grounded in a shared vision of tech's future, characterized by AI-driven growth and transformation. Such sentiment, buoyed by tangible successes and strategic commitments from Microsoft and Meta platforms, sets a compelling narrative for both investors and enthusiasts within the tech community. Focusing on Microsoft, given today's news, if I were in the position to make a recommendation, I'd lean towards a hold strategy, steering into a buy depending on your investment strategy and risk tolerance. Let's break down the whys and wherefores. 1. Stellar performance. Microsoft's recent fiscal third-quarter earnings show a solid performance, with a $61.9 billion revenue and an EPS of $2.94, both exceeding expectations. This indicates not only strength and resilience in their core sectors, but also promising growth. For investors, this is a clear signal of Microsoft's enduring market dominance, especially in cloud computing and AI technologies. 2. Aggressive dive into AI. The launch of AI services like Microsoft Copilot and Copilot Stack and CEO Satya Nadella's focus on a new era of AI transformation reveal Microsoft's forward-thinking mindset. It's steering significant innovation, hinting at continual growth and sector leadership that could spell higher future valuations. 3. Market reaction and resilience. Despite challenges, especially in cybersecurity, the market responded positively to Microsoft's earnings report in after-hours trading. This resilience and investor confidence could be read as a marker of stability and long-term potential. Why not a straight buy? Despite the bullish sentiment, the tech landscape is notoriously volatile. Factors like regulatory changes, cybersecurity threats, and competition could pose risks. Therefore, while holding reflects confidence in Microsoft maintaining its strong performance, leaning towards buy could capitalize on the company's strategic push into AI and cloud computing, anticipating further growth. However, for those already with substantial tech exposure or seeking less risk, staying put might be more prudent, keeping an eye on how Microsoft navigates its challenges and capitalizes on AI advancements. Important note, it's crucial for listeners to do their own research and consider their investment horizon and risk appetite before making any moves. The tech sector's rapid evolution means today's surefire success could face unexpected hurdles tomorrow. Always diversify your portfolio to mitigate risks and keep abreast of the latest developments in the companies you're invested in. Navigating the twists and turns of the tech investment landscape requires a cool head, a clear strategy, and a willingness to stay informed. Whether you decide to buy, hold, or sell, ensure it aligns with your overall investment goals and risk tolerance. Happy investing. In summary, today's tech market showed vibrant activity, marked by Microsoft's impressive earnings beat and Meta's strides in AI integration, both of which exceed initial Wall Street expectations. These moves have not only demonstrated the company's robust positions in their respective sectors, but also underscored the ever-increasing role of AI in shaping the future of technology and business. Amidst cybersecurity challenges and the push towards transparency and user control in AI, the market's optimistic sentiment highlights confidence in the sustained innovation and growth potential of these tech titans. Don't forget to like, share, and subscribe. Let's make sure this critical discussion reaches as many tech enthusiasts as possible. And remember, tomorrow we'll dive into more tech news, offering fresh insights and analysis. Thanks for watching to the end. Remember, this is just one story from our full daily show, which includes all the other news and an analysis of the day's tech market activity. If you found this video interesting or insightful, then please like, subscribe, and share it with others. Your support is greatly appreciated. Catch you later.